All right, we are live for the Mike and Mario show. Excited to be back. It's been a while, but we're here nevertheless. So, Mario, how you doing, my friend?
Yeah, I'm doing well. Good Friday today. So here it's a holiday, I guess, in the US as well.
Yeah,
So and it's a
yeah,
beautiful day. And yeah, it's nice to be back. You were
yes,
away last week, but
yes,
it just makes you more keen to come back. And I think the viewers also miss the Mike and Mario show.
definitely, definitely. All right, so we are live now. Looking forward to connecting. Lots of stories to get caught up on, as well as things to look forward to. But one thing I wanted to start off with, just because it's making headlines, and of course, take it for whatever it's worth, but it's worth talking about because well beyond your country, my country here, we've been very blessed and privileged to be able to live the way we've lived, but yet in other countries, they have not been able to share in those same privileges. And so I'll put together a little visual aid to kind of start us off, just because I think the fiat currencies, as the world spins, is the primary problem, and it's reflected in the cost and the increased cost of living and everything around us. But Mario, when you see this visual aid, what's the first thing that sticks out or comes to mind on your end?
All the paper money, really.
Yeah.
Yeah, and the thing is that we hear people giving excuses like supply chain, the war in Ukraine,
Hmm.
but no one talks about the 30 plus uh, years
Hmm.
of globalization, financialization of the
Mm,
United States, of the
yeah.
Western
Yeah.
European economies, where we've outsourced a production of everything that's real to all these other countries that are not in the West. And we've created a massive credit bubble. We've allowed central banks to create currency, trillions upon trillions out of thin air. They've bailed out Wall Street back in '08. Some people forget that. And we're paying for that because they had to issue debt to bail out Wall Street. That's how it works. And
Yeah.
the taxpayer has to carry that. And the same thing goes for the UK and Europe.
Mm.
Europe was bailed out in 2012. And yes, financialization as well. Uh, People think that we can move production.
Uh, Give me one
Okay,
second here. Having some
yeah,
glitches on my side. Looks like my camera. Give me one second. Let me make a
that's
little.
okay.
But you can continue on.
Yeah,
I'll finish.
so what I mean is that for 30 plus years, uh, our financial, monetary, economic, political system has basically created a Western world where the economies are based on credit and consumption, and where we've outsourced all the production of real things and the extraction of real things like commodities to other countries. And now it's coming home to roost
Yeah.
because, and I think 2020 was the key there. The amount of trillions that the major Western central banks created spooked the BRICS countries, and they're saying, "Yeah, we don't want your dollars or your euros or your pounds anymore," and,
Right.
and that's reflected in the value of the currency. Of course, many people look at it as inflation, but the inflation's already been baked in the cake. And
Mm.
what we're getting now is the value of our currencies dropping. And when that happens, the value of everything that we have to use to buy, use the currency to buy, goes up.
Right. Right. Very bullet point. And so one of the things that came to my mind was that just how the global assault on the working class in particular that are forced to use the fiat currencies that have been deliberately destroyed, and those currencies in and of themselves have been the primary catalyst as to why this wealth transfer is still, it's becoming more, it's becoming harder to hide, because governments now are looking for as many excuses as they can to point the blame towards someone. And of course, the Middle East, as well as the Ukrainian Russia situation, is the primary reason they're going to use that. And here in the West, the Putin price hike is becoming a mainstream buzzword that Biden loves using. So more charades, man. But it's hard to hide the increase in cost now. And so more videos are surfacing, more people are talking about how they're needing to crack down and determine how they're going to allocate their spending moving forward. So once again, in the last 40 years, we've never had issues like this. And even in the UK, I'm seeing more articles talking about how the price of living, the concern of living, things like that, and it's impacting people's overall happiness and lack thereof. And so that I want to take that one into the next little visual aid that I sent you, just because it's it's something to look into. But I just thought it was worthwhile. But this is something from Visual Capitalist. It says the most and least happy countries around the world, and this is not even including the monetary financial side of things. This is just 5 or 6 different criteria they're using. But if a majority of these purple/pink fuchsia countries are already unhappy, according to this source here, wait till you factor in the financial side of things. But what are your thoughts when you saw this?
Well, I'm not surprised that the Ukrainians are very unhappy. You can least happy in Eastern Europe, and I was surprised to see there's an island there
Let me
off
see
the
if I
coast
can.
of Africa. There,
Yeah,
what's it called?
I mean, zoom in here.
Mauritius. But that's, it says is the most happy in Africa, but it's not even in Africa.
Yeah,
And but yeah, I was surprised that Brazil was fairly happy,
yeah,
6.3. And I was surprised that Portugal is less happy than Brazil, because I think of Western Europe still in pretty good shape relative to like countries in Latin America.
hmm
And Finland, I guess, looks like the happiest country in the world, and they're looking to join NATO as well. They might
yeah,
not be too happy after they do that, because
correct.
I don't think the Russians are going to be too impressed about that.
Right. Putin's already made it clear, what's on the table if that happens. So, but I just thought this was interesting because the metrics they're using, which it says here: social support, life expectancy, freedom to make life choices, generosity, GDP per capita, perceptions of corruption, and positive and negative effects. So, those are just things that has nothing to do with
Yeah,
the financial realm.
but
Because
even within countries, maybe like Australia, looks very happy,
yeah,
and even Canada. But I think there's still also a lot of very unhappy people in those
hmm
countries, especially in the last 2 years.
right,
People forget very quickly what's happened in Australia and Canada
yeah,
because of that thing,
right,
that we don't
right.
talk that much more about.
Right. And is it any surprise that, whereas I think this article mentions about Canada being Canada as well as Australia, one of the happiest. And I'm thinking, like, I don't think the Canadians are really all that happy given all the things that they've experienced and witnessed, as well as the fact that their Trudeau is the World Economic Forum's primary puppet. So I'm like, but it was entertaining to say the least. But I want to touch on the next one that you shared with the map, and how the actual size of the countries are not really what they seem. But what this is what you said to me. So share your thoughts on this one.
Well, the world map that we usually see is called the Mercator map,
hmm
and it focuses on the northern hemisphere. If you
Yeah.
notice at the equator, it's a lot lower. It should be in the middle of the screen.
hmm
And what that does, it makes Russia, North America, and Western Europe look a lot bigger than they really are. So
Yeah.
this is how this is the true size of the continents,
hmm
and it shows that Russia actually is not as big as it seems, nor Western Europe.
Yeah.
So this is a good one here. This is how they show it to us, and now this is how it should be.
Mm.
Look at Greenland is very small, but it looks huge.
Right. Right.
But I'm not sure if that's to do with the vestiges of colonialism, if,
Right.
you
And
know,
and I has I'm thinking of, like, when you look at the globe, the Earth globe, and how it has been changed. And I'm assuming this what we see in the US from academia is a lot different than what they might see in South America or even in Africa, as far as the actual size of the continents, because each creator of their own digital versions of a globe has their own incentives to make it look like they're bigger and better. Like here
yeah,
in the North America region, America's so much bigger.
yeah. I actually think if I remember well, in Brazil, we used also the Mercator map, so it
Mhm.
doesn't really matter.
Yeah. But so let's keep moving right along. For those that are plugged in, appreciate you for blessing us with your presence. Definitely throw out some thoughts, ideas, suggestions, and we'll do our best to touch on them.
I
But
just wanted,
go ahead. No, go ahead.
I wanted to touch upon, you said something about the cost of living and how the average worker is getting hit harder.
hmm
And that's what inflation does. It hurts those on fixed income, those pensioners, the working class,
Yeah.
the poorer people,
Right.
uh, and the people who are wealthy. They're able to, because they earn more, they can put more aside and convert those fiat currencies that are going to zero for real things, and they actually sometimes become even wealthier. So it's a
Right.
system that's created all the inequality in Latin America and in other third world countries.
Right. Very good point there. And when it comes to the people who are better off during times of transition, happen to be the asset owners, people who own real things that the world needs. And those are the ones that tend to profit no matter what, because they actually own assets that produce for them. And so that goes into our education system and lack thereof, and how we view our labor and everything else. But a lot of this is playing out right now, I think, with the whole Twitter Elon Musk feud. He has 282 billion net worth, or worth in total, and he is willing to pay 3 billion, or how many ever billion, 43 billion to actually
43
buy it.
billion, yeah, yeah.
Right. So it's like he got some money to play, a currency to play around with. So primary example of how the last 2 years have been very generous to a lot of asset
Yeah,
owners.
I remember a few months ago he sold quite a few shares in Tesla, and
Several rounds.
I think that he was already thinking of buying Twitter.
Hmm.
He didn't say that,
Yeah.
but he was, and I don't, and it's funny. I saw a headline saying, "Oh, how is he going to finance the purchase of Twitter?" But a guy who's worth a few hundred billion,
Hmm.
why does he need financing to buy a company that's 43 billion?
Right. Right.
Because when I listened to him, I think he was on the what's it called? Something B.
I'm not sure. As recently.
Yeah, he was doing an interview with this. They're kind of I forgot their name now, but it was a really good interview, and he was telling them that he doesn't have any debt, he doesn't
Hmm.
have any offshore accounts, and that his finances are very transparent.
Hmm.
So it's funny that the mainstream media says, "How is he going to finance the purchase of 43 billion?"
Hmm.
Well, I mean, very easily. If he's got 250 billion worth of
Right.
Tesla, he can sell a quarter of that and
Right.
buy Twitter.
Right. Or just leverage having ownership of Tesla and use that to finance, because
He
in that
could.
class most people love to use other people's
Mm,
currency,
yeah,
i.e. the Robert Kiyosaki. So why use your own when you can easily get
yeah.
someone else's?
I'm not sure he's that kind of guy, but maybe
Yeah.
he is. Who
Yeah.
knows?
But I would also assume he has a nice hefty team of individuals around him that can, chime in where he's lacking in financial
Mm,
literacy or whatever. So, but let's keep moving along. Man, we got lots of stuff to touch on, but you kind of hinted at where I want to go next, and that happens to be about just the headlines that are popping up, primarily in the developed world, but definitely the pain and impacts being felt in the other nations that are not getting enough attention. And so this is just something out of the Guardian talking about the cost of living crisis. And of course, the Bank of International Settlements is coming out with their 2 cents on it. And they're pointing to inflation or whatnot, but not telling us that it's their fault and the central banking aspects of things, the reason why things are the way they are. So I just thought these were interesting because people are feeling the pinch in real time. And even in this article here, one of the fathers was talking about his concern of the cost of living going up and his inability to sustain himself, and he's afraid that he might have to turn to crime. And I'm
yeah,
thinking like, wow, like, okay, that typically happens during time when things are tight. You got a choice: feed your family or go make something happen. And I'm like, wow, we haven't really seen anything yet. And I think this story is out of the UK, so it's like, wow, like, yeah.
I saw that. Yeah, and that this guy he lost his job because he hurt himself,
Hmm.
so he's on benefits. And I'm not having a go at people who are on benefits.
Yeah.
Sometimes, they fall in tough times
Right.
because of no fault of their own. And when you have a job that doesn't pay well, it's difficult to save so that you can keep going if you lose your job. But it shows again that, and this is my opinion, that
Hmm.
the welfare state makes people more dependent And it costs people, because if we didn't have to finance the welfare state, even people who, for example, didn't earn as much as a well-paying job, maybe I think he was a laborer or something, he'd be able to save more. If there was an inflation as well, he would be able to afford things. But now what he's talking about is universal credit, which is basically the dough. They call it universal unemployment benefit, and it's only a few £100 a month. And I think even if there wasn't a cost of living crisis, you still can't really live on £260 a month,
Right.
even if inflation was zero. So
Yeah.
yeah, it's unfortunate. I feel bad for that guy, and I think he's not the only one. I saw a tweet last week from a Labor MP, and it just shows how he's out of touch. He was talking about two of his constituents, a couple in their 80s, and apparently they've had to turn off the heating because they can't afford it anymore.
Yeah.
And the husband, who's 83, is thinking of going back to work. And this MP said, how can this happen in the fifth richest nation in the world? Well, he hasn't been looking at, you know, the monetary fiscal situation for the last 20, 30 years. Yes, we are living on debt. And that's why it looks like we're wealthy, not just in the UK, but also in the US. And that's not saying that uh, the standard of living here and in the US are, are bad, but we've been living on borrowed time.
Right, I agree. And speaking of living on borrowed time, the baby boomer generation, those who have put in the most work, that's the demographic I tend to really dive deep into, because they were part of this hyper financialization of the monetary system and enjoyed the benefits of it. But now things are starting to hit the fan, and debt is the primary reason. And you mentioned retirement, having to consider coming out of retirement. So there is a new movement beginning right now, and it has to do with unretirement, and it's on the rise. And so I thought about this, and so it says a lot of U.S. workers now are deciding to get back into the labor force just because of the increased costs and things that, when they were being told to put aside funds, they were not able to. Basically, they had a foresight in realizing that monetary policy would end up being their worst enemy and destroying what they thought, that pot that they thought would grow exponentially.
Yeah,
In actuality, it's compounded inflation has eroded that significantly. So, but unretirement is something we're going to hear a lot more about, unfortunately, and that's why, it touches my heart.
they haven't been listening to the Mike and Mario show, I guess.
Right.
And the other thing I would say, even the baby boomers who are better off, they're not guaranteed either a good retirement, because if the Fed and other central banks go ahead with their tightening, we could see stock markets correct big time, and a lot of their wealth is parked in paper assets, things like stocks and bonds. They have very little hard assets, I would say. So even those people who are middle to upper class, they're under threat as well. And I think that's probably why the Fed in the past and the Congress have been so determined to stimulate things. But will they pull the plug this time? Who knows? It feels like they want to, but you never know. If you look back, the Fed, whenever they start tightening and there's a problem, a big crisis, they reverse everything and start printing again. But this time, if they do it again, it could basically destroy the dollar, and you destroy the dollar, and you destroy, because people are going to say, when are they going to stop this?
Right. Yeah, so I have some very deep opinions on how things will unfold. And so, but let me get to this first. So you mentioned about hard assets, and in regards to but when a correction occurs, how it's going to be a readjustment of the pricing of every single thing, and including hard assets. And the primary asset that people have been taught or been led to believe is a reassured guarantee wealth preserver mechanism is their home, their real estate. And so
Yeah.
for the retirees in particular, once you secure your house, pay for it or not, that's an asset you can keep and borrow against and pass on, whatever. But we're witnessing how that might shift. And then also beyond that, the stock portfolios, all the financial products that were sold to us. But when the stock market has its hiccup, everything else will come into play as well.
Oh yeah.
And then this plays into just the current surge, to the slowing down of the housing market due to borrowing costs all across the board going up. So this to me is more of an indicator as to what could be one of the leading drivers towards this next market downturn, on top of the bond yield inversion, things like that. But this is not helpful in a country that is built upon everyone deserves a right to own a home. It's a God-given right that you must own. But are you really owning when you're financing and you don't really pay it? So anyway, yeah, long rant there.
Yeah,
But
it's the same thing here. They say that an Englishman's home is his castle.
mm-hmm,
And I was surprised when I moved here in my 20s, 30 years ago. I was from Switzerland. In Switzerland, back then it was different. People rent a lot.
mm-hmm.
But I was surprised so many young people already had mortgages and were buying homes, in their 20s.
Yeah.
And yeah, I forgot to say that also, if we see the Fed tightening, and we saw that mortgage rates now, a 30-year mortgage rate is above 5%. I
Yeah.
think it started the year around just above 3. So it's a big move.
Mm-hmm.
And we could see, and I'm not saying that owning real estate or land is a bad thing long term, but there's a lot of people out there who are highly leveraged on their
Yeah.
real estate or their home. Even people above 50, I would say. And yeah, that could be another thing that hurts the middle class quite a bit.
Yeah. Big time. Okay, so let's keep it moving. More things to touch on here. Let me see what else I got here. What's next? So okay, we can't go too far without talking about what's happening with Russia and the sanctions. And so here's something I thought was interesting: U.S. sanctions on Russia likely to boomerang, drive inflation higher.
Well, they're already doing it. I mean, and I would say, though, let's not put the blame on rising prices, because inflation is really the creation of money and credit.
Correct.
I keep reiterating that, because we got to put the blame on the people who created the money and credit out of thin air.
Right.
But it's true that prices of commodities have gone up since the start of the war. But if you look back, we were talking about this in September last year, how natural gas was making all-time highs, how we'd have a shock in Europe
Yeah.
in the spring of this year when they lifted the caps, for example, in the UK. We already saw oil, go through the roof even before the Ukraine war.
Yeah.
So, yeah, but it's going to make it even worse, and at least it's going to give the powers that be a scapegoat.
Right. Here's
Our friend,
Augustine here,
fat bastard.
the fat bastard. But yeah, so here's okay. So Mario, there's another camp out there, and I think it's the deflationary recession camp, saying that when this next market glitch happens, central bank driven because of the tightening, things like that, they're sucking out all the liquidity, which has been the primary inflator of all the assets. As they pull that out, there will be a day of reckoning. Now, that day of reckoning will result in a complete collapse of the prices for housing, the equity market. Like the Dow Jones will probably have one of the most. I saw that chart you shared. I shared as well. The Dow to go ratio, basically saying that when the Dow drops, maybe half of an ounce would be the equivalent of what you could use to acquire a share of the Dow, which is a significant drop. So in that environment there, for those who have liquidity or access to funds, that will be the biggest buying opportunity in a sense, because everything might be cheap.
The deflationist camp, I think they confuse terms because what they're talking about is a correction in asset prices down, deflation of prices. But I think what's going to happen is that the currency for everyday goods, for basic necessities, things are going to get worse.
Hmm.
We had it in the 70s, and the same people, the Keynesian uh, economists who are still in charge, they didn't think it could happen in the 70s, where you had a recession and
Hmm.
rising prices. And again, they think it's going to be the same. They think that we're going to have deflation of prices.
Hmm.
Yes, maybe asset prices, but consumer prices, I think, are going to remain high
Hmm.
because, yeah, all the currency and credit that has been created out there is still out there,
Hmm.
and I doubt the uh, the Fed and the other central banks really want to see uh, the money supply really tumble,
Yeah.
because that would be deflation. What they're going to do is try to unwind their balance sheet. So I'm not in the deflationist camp.
Hmm.
Uh, People have been looking at money velocity, like Jim Rickards,
Yeah.
and he didn't see this rise in prices or inflation come. So they've been wrong about it.
Yeah. So to reiterate all that. So on the consumer goods side of things, the things we need on a day-to-day basis, food, water, shelter, whatever, you're gonna see a continual spike higher as currency chases those goods because they're finite in nature.
Yeah, and our currencies are going to go down in value as well.
So it's gonna require more units of currency to acquire the things we need on a day-to-day basis. And then on the asset bubble side, like for the stock market and the
Yeah.
real estate, so those prices will correct and
Yeah,
come down
and
to
the
a.
liquidity, the ideal liquidity, in my opinion, to have is gold and silver, because
Mhm.
they're real cash. They're going to hold their value and might even go up quite in relative terms.
Yeah,
And yes, and hard assets as well, commodities are going
yeah,
to hold their value, and that's why it's going to be really tough on the majority of the public, and it's going to be tough even on uh, the people who are asset rich,
mhm,
paper asset rich, I think.
right, right. So I want to here's that chart I was referring to here. Um, we're showing the Dow to gold ratio and just this, this technical analysis of long-term trend of what could be in the future. And so this red line all the way down here is the Dow Jones if it happens to tank what a
Yeah,
half an ounce ago, not a single ounce, but a half, which
yeah,
has never really
I,
happened before.
I'm yeah. I'll go through this a little bit, because I've seen this Dow gold ratio going back to like the early 1800s.
Hmm.
And what you will notice is that in the 1800s and up until 1913,
Yeah,
the Dow gold ratio, it was choppy, but it was quite stable.
yeah.
And basically, this is how many ounces of gold you need to buy a Dow.
Hmm.
So the higher this is, the it means the top of the credit cycle. It
Hmm.
means, a bubble. And ever since 1913, if you notice, the credit cycles are getting bigger and bigger,
Right.
and all this will mean, if we go to below one, it means that with 1 ounce of gold, you'll be able to buy two Dows.
Hmm.
And yeah, I think that could happen. And we will have to see what happens after that.
Right.
If the Fed stays around, we could have an even bigger credit, growth,
Yeah.
another cycle of growth in the next 30 years. If not, if central banks disappear, we could see the credit cycle start up again, but it won't get as extreme under a central bank
Hmm.
central banking system, because central banks, they and the Fed especially, they've been artificially inflating these credit bubbles,
Yeah.
and that's why they're getting bigger and the corrections are getting worse. And
Yeah.
if you look at that again, actually, the top of the last credit bubble was
Hmm.
in around 2000. You could argue that we've been in deflation in terms of real money, gold,
Yeah.
since then.
Good
We
point.
have had a counter trend rally, but now it seems to be keeling over again.
Yeah, and then also just on we witnessed the global lockdown, and just that to be reflected in just this small little, just a little jolt. It was minor in comparison to what is probably on the table moving forward. So this got it going out to 20. I don't tell her what time frame this little line goes out there.
2030, yeah, it says
It's within this decade ultimately.
it's
So
possible. It could be even quicker. Who knows?
right,
Or it could be,
especially
or it could take a little longer.
right, especially with every central bank. You know, the UK, Canada, everybody's trying to. They all are coordinating this tightening phase that has never been done before under this type of fractional reserve credit dependent system. So they clearly know what they're doing. They're not incompetent in the fact that they're trying to deliberately bring down some things so that they can rebrand, restructure, and issue the digital versions only, and basically have the ultimate welfare state. Because if society crumbles, the supply chain is the primary focal point of everything. Real goods and services moving logistically, putting everything on a blockchain ledger, tracking, tracing it, and then they'll allocate it according to your score on your phone, the ESG credit score, all that other stuff that's a part of this global heist is so predictable, in my opinion. But yeah, to move on further, let's talk a little bit about what's happening with the yen. So you did a great video that's going viral right now as we speak. Shine some light on what's happening and what got you on this?
Well, I've been talking about how all the major fiat currencies in the world will eventually go to zero, that they're all sinking. And to look at the dollar index is kind of a waste of time. And I even wrote an article back in 2007, which is still online, about that.
Yeah.
And the yen being a major fiat currency, considered by many as like a safe haven currency, is not acting like one. And I've been following the yen against the price of gold, XAU JPY. And recently, well, as of yesterday, we closed almost at 250,000 yen per troy ounce, which is an all-time low for the yen, all-time high for gold. So I think it's only a matter of time when the other major fiat currencies like the pound, the Aussie dollar, the Canadian dollar, the euro make new highs, like make new lows versus gold. And also the dollar is going to follow. And right now, what's happening in Japan is that the Bank of Japan, they're continuing to do QE. They have no intention of raising rates, no intention of tapering, and they're also doing yield curve control, and they're basically destroying the yen, and that's very serious. And I think also the Bank of Japan and Japan, they've been a guinea pig for this monetary policy that we've seen in the West, extremist policy of zero rates or negative rates, QE. And I think eventually we're going to go the same way of Japan, and we're going to see our currencies drop massively versus gold, which is, of course, gold going up.
Right.
And that's why I think it's so significant what's happening to the yen.
Yeah. And speaking of which, as you're describing this, and to me, it's not as sad and somber of a feeling to watch the fiat crumble when we view gold and silver as constitutional / lawful money, and it's reflected in the amount of paper units needed to acquire an ounce. So having an ounce or more, or whatever, in metal, in money, you're on the benefit, you're benefiting from their own chaos and destruction. So to see this chart go up, like that phrase that they use in the crypto space, to the moon, there's no ceiling to how high the fiat price of money can go in silver gold terms, just because it's real. It's the kryptonite towards a crumbling central bank Ponzi scheme. So it's just more of an incentive for people to take advantage of the current manipulation in the West. It's just a matter of time.
And what this is like an escape valve as well for investors who in Japan, because bonds, Japanese government bonds, they're paying nothing. He's put a lid at 0.25,
Mhm.
so they're printing as much yen as they need to keep the interest rates low. But there's a price to pay, and it's the currency collapsing against gold.
Right.
And I think eventually it will happen in the US and the UK, because we can't afford to let the 30-year or the 10-year yield go to 4%.
Mhm.
So they're going to come back and start doing what the Japanese are doing. And it's my opinion that their currencies, the dollar, the pound, the euro, will go the same way as the yen.
Hyperbolic. All right, let's so acknowledge a couple people. Kwame King, appreciate you, my friend, for the love offering. We got Miles. Miles has a question or some thoughts. It says, can't central banks just literally destroy and erase all the physical and digital cash they want to combat inflation? They can just write it off. One more payment on my rent, on my wrench. One more payment on my wrench. Um, so I think so. I will share my 2 cents on this. So I remember seeing was it 2 years ago, 3 years ago, MasterCard in Canada decided to cancel all the Canadians' cards or something like that, and they wrote off the entire how many ever millions worth of losses, and that was on their ledger. So if the digital representations of Canadian dollars were able to be discharged with no problem, and not sure the repercussions of that, but on the commercial side, I think it probably is probable, but then again, somebody's asset is somebody else's liability. So
Yeah.
the counter to that will be the
Well,
problem. It's a domino effect.
I think the central banks, like the BOJ,
Mhm.
is destroying the value of the currency. That's
Yeah,
what that chart of gold shows.
yeah,
And they don't have to destroy um, the physical Japanese yen. They just have to destroy the purchasing power of it.
mhm,
And it's probably because Japan has over 200% debt to GDP as a government. So the lower the currency goes against the yen,
yeah,
against gold, sorry, that's a, how can I say, that's a default, because gold is the ultimate form of payment.
yeah,
So if you have a lot of that, the best thing you can do is to allow your currency to collapse against real money, because then it will be very easy to pay that debt eventually. And I think that's the way we're going to go, because destroying currency like that, you stop economic activity, destroying debt.
right,
And with the hyperinflation that we're seeing in Japan, I think it's hyperinflation or
mhm,
very high inflation, even though people say there's deflation in Japan. You're basically keeping the system going. And yes, it's the next best thing to physically destroying the currency, I would say.
right. And speaking of that, as you're saying that, first thing that came to my mind is that I remember always having heard that the Japanese people, they are probably they have the greatest, that their demographics are a lot older and they're savers. So they have, they're considered a superpower when it comes to savings. So they're the ones that are basically being hit the hardest with the weaponization of the yen. And so they're literally losing more than we can ever imagine, because they're considered to be like super savers in a sense.
Yeah, and what's happening here too is that the BOJ is kind of a foreign arm of the Fed.
Hmm.
And what this policy in
Mm,
Japan does to the savers is it pushes them to buy treasuries and other foreign bonds.
yeah,
So if Japan wasn't doing this to destroy their currency and keep their yields low, I would think that treasury yields would probably be way above 3% by now. The mortgage rate in the US would be probably 6%.
yeah,
So, Mrs. Watanabe, that's what they call the Japanese saver.
hmm,
She's like how can I say, the prototype or icon of savers.
hmm,
She's holding up the world bond markets for now, and I think we need to keep an eye on the Japanese bond market, because if the Bank of Japan loses control of the yield there and it starts going up, you could see the yields for treasuries, for gilts, for uh, European bonds go up as well very quickly, and it won't be pretty.
Right. Yeah. And then, to counter that tradition of being savers, and that's a part of their culture. Another country that also has savings built into their culture happens to be the Indians. That it says households have stocked up 25,000 tons of
Yeah.
gold. So it's a different type of savings for a different outcome. But in Japan, they got the digital representations and all types of products. Whereas in India, they got actual jewelry around their neck in the form of real metals that
Yeah, and this is according to the World Gold Council, and
yeah.
I don't trust the World Gold Council. They're
Uh-huh.
aligned with the central bankers, and they're trying to push the Indian public
Mhm.
to basically uh,
Lease
sell their gold and
lease out their
and
gold.
have because they're saying, "Oh, you should have ETFs. Physical gold is too cumbersome." And so don't trust the World Gold Council. And to if there are any Indians watching here, keep your physical gold.
Yeah, yeah. And I definitely imagine for everyone that's tuned in to Manico 64 as well as RTD, we really they know the importance of getting their weight up literally. So
Mm.
I doubt it's hard to fool someone on the Austrian school of thought anyway, especially give and take what's going on now. But let's get to some questions. So feel free to throw out some thoughts, ideas, suggestions, questions, and we'll share our 2 cents on it. And yeah, lots of stuff is unwinding very rapidly. All right, let's see here. If anything jumps out to you, Mario, feel free to.
Yeah, Rolf Steiner says this is a huge battle. Let's see.
Where we at?
Of the entire world to get out from under the American empire jackboot. I agree, but I don't think it's the American empire in terms of the American people doing this to the world. It's more the financiers, the Anglo-American Wall Street, City of London establishment,
Hmm.
and I think it's a good thing. And I'm not against bankers per se,
Yeah.
but dishonest bankers and what they've been doing since 1971. I mean, it will be a great day when this whole house of cards implodes.
Hmm.
I mean, of course, unfortunately, that a lot of people will be hurt, but the prospects going forward, I hope are going to be a lot better.
Right.
You need to sometimes uh, the forest needs to burn down for it to grow again,
Right.
so to speak.
Right. And then I got another question right here. Somebody got to you, but also, just to go back to this map earlier about this is just a generic version, the generic measurement of the world's happiest and where whatever. And so it's very skewed. But the nations that are purple and fuchsia, whatever, those are the nations primarily in Africa, whatever. Those are the nations where they are already experiencing extreme, financial issues, like just due to the fact that they are
Yeah,
considered, but those elections are well below the quote unquote poverty line anyway. So those nations, they don't have much on the table to really lose.
yeah, and if you look at that map, the nations that are unhappiest, they're the ones who have all the natural resources. They're the ones who haven't been part of the bankers club, whose
Hmm.
currencies haven't been, manipulated higher.
Right.
So I think those nations hopefully will be a bit happier after
Right.
this shift from paper to hard assets. Just have another question here.
Yeah.
Chad Knight, tell me about Glint. Is owning physical gold along with purchasing gold with Glint worth considering? Uh, I do. I am associated with Glint.
Hmm.
I do have like a referral code, and I do have a Glint card, and they do hold your gold, allocated gold, physical gold in the vault in Switzerland, and they allow you to spend that gold through their Mastercard through an app.
Hmm.
And some people like that,
Right.
so it gives you the option. But I personally wouldn't put everything with them.
Right.
I still prefer the physical, but everyone has a different perspective.
Right. And so I have not a different, but so I like to look at everything with a critical eye. And so I'm thinking like right now times are good to where you can swipe with no problem. And you can probably get on the phone and call representative, say, hey, ship me okay, cool. I'll put it on UPS, FedEx, whatever you got to do. But I'm thinking like when stuff hits the fan, like what we're anticipating could be in the future, rule of law and
Yeah.
contracts itself will be suspect to whatever
Yeah.
jurisdiction you
Well,
have to go fight those things. I'm like, in the short term, great. In the long run, I would question it just because I wouldn't trust no
yeah.
man.
No,
As
and
they'll
that's
get us
why
banned.
I prefer still physical,
Yeah,
and but some people might want to
right. So
prefer that.
diversifying and having a little bit. So I do believe that
Yeah.
that is a great strategy,
Yeah.
just because you never know
Because
how stuff, where
yeah,
the wind may blow.
yeah, and I guess yeah, there is a danger that world goes Mad Max and things get ugly,
Yeah.
but there's also a danger, if you want to call it that, the world keeps chugging along. So
Correct. Because
you never
they've been
know.
doing a good job of being able to paper over a lot of things,
Yeah,
and
yeah.
they can probably do that for quite much longer than we anticipate. But here's another question, and has to do with the crypto side. But it says to Mario, don't you think their plan is to destroy the term of real money? This is why Bitcoin exists as it is capped, not with it, but understand the tech.
Yeah, I think they've been trying to destroy the fact that gold and silver are money for the last 100 years, but I don't think they will be able to because you can't destroy the truth.
Hmm.
Um, yeah, Bitcoin I think is and cryptos are in a way a distraction. I think if we hadn't had Bitcoin, a lot more people would have gotten involved in gold because
Yeah.
after the '08 crisis, a lot of people woke up and said, "Hey, what's going on with the system?" And they started looking into the nature of money, the nature of the monetary system, and then right when people started looking at that in '08, '09, comes Bitcoin,
Mhm.
and
Right. That's coincidence or intentional. Like I'll let depending on what camp you're in, will
mm,
determine what you think about that. So all right, let's get some more questions out there. Let me see what else we got here. Speaking of which, silver being the ultimate form of a hindrance. Silver is the ultimate hindrance to the banking system
oh yeah,
because it's more affordable now, but yet it has a bigger
yeah.
upside because of its utility for powering the world ultimately. So if that was to get into people's hands, like the fact we have politicians in the US now talking about going on Bitcoin making illegal tender, I'm like, just encourage people if you really care to go out and get a couple ounces. Make
Yeah,
sure every citizen got a couple ounces.
I think, silver is a hated and forgotten metal,
Hmm.
but I think it will come back because it's a little bit like gold. It's in our DNA. You
Hmm.
look at the name of currencies like dollar and peso. It's all related to silver. And when the price of silver starts really motoring up, people will wake up,
Yeah.
and that's why they've manipulated silver the most.
Right. I agree. To me, silver is the epitome of a stable coin. It doesn't move, it doesn't fluctuate. Only thing changes is the amount of digital
And it's the
representation of paper it takes to get one.
money. Sorry, it's the money and the currency of the general public.
Hmm.
Uh, I mean, gold is good as well, but it's more. Not everyone can afford gold, but
Right.
maybe that will change. Maybe it will be also very difficult to afford silver.
Right. I do see that. I do see some type of event like that unfolding. And I think a lot of the digital transition that we're going through is geared towards the younger generation because those are the ones with the cell phone access. They only know internet. And the tap and pay is all they do. They don't even hold physical paper no more. And that's going to be the medium of that allows a transition. Paper not being used by people by choice, but then the convenience of tapping and pay and eventually using your hand or putting your finger somewhere and all
Yeah.
that stuff. But
Barlight Broker says that he's Indian. We were talking about the world gold king.
Marley Broker's a gold. He's a gold bug. He talking about
Where
wearing
is
gold
low?
chain.
Where's low blood pressure? I haven't seen him.
LBP's out there, man. He's probably like, no. Well, today he's got the day off, I assume.
Okay.
But no telling. But Miles says, why was copper stopped being used as money?
I think it's because the price,
Hmm.
the price of copper went up above the face value of the pennies and all the coins,
Man,
and I think it was probably a bit manipulated, just like silver was.
yeah.
But it went out of circulation because a penny, the copper in the penny, or in the UK they have the tuppence with two pennies,
Yeah.
uh, became too valuable, so it went out of circulation. It's because of inflation, really.
Yeah, and just to think about, I was trying to put up a little visual aid here of just showing how far we've come with the privatization of national currencies through central banking, and everything has come from that. Because it wasn't too long ago where it was a penny, a half a penny, and a nickel and a dime, and all
Yeah.
those.
In the UK, I think, they had a quarter of a penny,
Yeah.
which is called a farthing.
So yeah, like we've come a long way to where the value of these things, as far as what you could purchase, was more reasonable. To where like a day's wage was like a dime or something like
Yeah,
that, two,
yeah.
300. So yeah, but yet all of that can be made up when stuff breaks and gold and silver, the fiat price is revealed for what it should be. I think that could be a day of reckoning to make all that up, as far as those who have it being able to sustain themselves a lot better than those who do not have them. So, all right, we're at our 50-minute mark, Mario. Let's sign off and leave us with some good news. Anything come to mind for you heading into the weekend?
Um, well, I guess it's the, Good Friday today. It's like the Passover as well,
Mm-hmm.
when the Hebrews left Egypt.
Mm.
So maybe, hopefully, Pharaoh, which is like the New World Order, will go the same way. The New World Order will go the same way as Pharaoh.
Yeah.
We'll see. Who knows? Things, come in cycles. They happen again. So maybe there's some hope.
Yeah, 100%, man. Hey, I can't top that one, man. That's legit right there. But no, it's always great to connect. Everybody, we appreciate you for blessing us with your time. Manico64 on YouTube, go check them out. And other than that, Rethinking a Dollar, you can find me everywhere. Be blessed, be safe, have a great weekend, and we'll be back at it next week because there's gonna be more to talk about. So, enjoy your weekend. Peace.
Peace.